Hi, this is Arthur. In today's video, I'm going to talk about the most common things that new home buyers don't know before committing to buying a home. You probably know you need to have a good credit score to qualify for the mortgage, but what is exactly good? And what can you do to improve your credit score? You need at least 640 credit score in order to qualify for a mortgage. And obviously, the higher your credit score is, the better rate you're going to get on your mortgage. What if your credit score is less than 640? Is it impossible to buy a house? It's not impossible, but it is hard. And you need to consider adding a family member, somebody who has a higher credit score in order to qualify for a mortgage. Pay your bills on time. Even though you might be making minimum payments, just make your payments on time. Every late payment will take up to 8 years to be removed from your credit report. So it will take a long time to improve your credit. Keep your credit card utilization under 25%. This is what the experts recommend highly, and this is the most important thing next to on-time payments. If you are just starting to build your credit, get a secured card. These are the cards you pay a deposit upfront in order to use them. Become an authorized user. You can ask one of the family members to add you as an authorized user to one of their credit cards. As long as they make their payments on time and they keep the balance low, you are good to go. With that, you will be able to increase your credit score by just being an authorized user connected to your credit report. Get a cosigner. Asking a family member or a friend to co-sign with you on a personal loan or a credit card can be a huge favor because their credit score might be at risk. However, it's a very effective way to build your credit score. You can also consider working with a small local lender who might have alternative financing options with a different data. Obviously, the best solution for getting your mortgage would be improving your credit score. If you are salaried, you need at least 6 months of work history. And if you are self-employed, your company should be active for at least 2 years with the payment history. And if you just change your jobs and still remain in the same field, that time will also count towards your work history. Based on your financial qualifications, a mortgage lender will recommend you a price range and will give you a pre-approval. And with that pre-approval, you can start your home buying process by budgeting yourself. And you can be very confident when making an offer, since you already know that you will be 90% approved for your loan. There are some fees associated with the purchase of a house. Those fees include prepaid interest, prorated taxes, homeowners insurance premium, and so on and so forth. Now, these fees may be roughly 3% of the purchase price. So for instance, if you are buying a $400,000 home, your closing costs are going to be approximately $12,000. Now, closing costs are required to be paid at settlement on top of your down payment. Always work with an expert realtor so you don't say, "I wish" at the end. Call us with any real estate questions and subscribe to our YouTube channel. We are here to help. Take care.